As part of our Bridging 101 series that we're currently running, the very first sector of that, few videos that we're going to do are about the basics of bridging. So before I go into our key point of today, our key point being when do you use a bridging loan and when do you use a sort of term loan, a normal standard mortgage that's got no early repayment charges. So this is a question that comes up for us a lot. That's what I'm going to go into. Just before I do, allow me to briefly introduce myself. My name is Howard Bowes. I'm the Managing Director of Harvey Bowes. We are niche mortgage brokers that specialise in providing finance for property investors, whether it be development loans, bridging loans, standard buy-to-let, or even a residential mortgage on your own home. We can arrange all of those mortgages. We are fully regulated by the FCA and directly authorised by the FCA to search for those mortgages for you and to give you the advice that you need to finance your deals. So to get back to the question in hand, what the question for today is when do you use a bridging loan and when do you use perhaps a term mortgage? That's the term that we use, a standard mortgage with no early repayment charge. Well, quite clearly, when you work out the maths of the general circumstances, a standard mortgage with no early repayment charge, it still has setup fees, etc. But it's normally cheaper, like for like, than taking a bridging loan over the same time period. However, any mortgage you take should be for a property that is fit for purpose. So the property should be habitable and you should be intending to move tenants straight into that property in its current format. Under those circumstances, you can use that type of mortgage. Otherwise, if it's not fit for purpose, you should always use a bridging loan or a short-term loan, short-term finance, and there's specific products designated for that purpose, and that's the ones that you should always use if you're going to change the purpose of the property, if you're going to do a mid to heavy refurb on the property, or if you're going to repurpose the property, in other words, convert it from a standard property to a HMO or something along those lines. Now you'll note that I did say if you're going to do a medium or a heavy refurb, because there are a handful of lenders out there that will allow you to go straight onto a term mortgage if you're carrying out, so that's a standard mortgage, if you're going to carry out a light refurb, a soft touch refurb on a property. So you can do that with a lender. That's not viewed as product abuse, as the lenders would call it, where you're misusing the purpose of the loan. You can do that, but if you're going to completely repurpose it, medium or heavy refurb, it should always be done on a bridging loan to start with.